Hey, good morning. Let's go over today's trade plan. In the overnight session, we saw a continuation of yesterday's upside move with responsive sellers active in the 45.5 to 47.5 area, which we're going to use as the pre-market resistance zone heading into the open. On the downside, we have initial support at 38.75 to 41. Now, this is technically a aggressive area of support, but if the market is going to balance and then break out to the upside, and reverse back into 51 to 53 and 57.5 to 60.5, then ideally we'd want to see ES holding above 38.75 to 41. A failure at initial support doesn't necessarily mean that the sellers are firmly back in control, but it does tell you that there's not enough strength for the market to really just break out yet, and from there we can come back down and test 33 quarter to 34 quarter, and then the more important zone is 29.75 to 31.75. This zone represents the area of breakout from yesterday afternoon. So if we can hold 29.75 to 31.75, then the market is still technically a little bit more bullish, and we can return back up to 38.75 to 41 and possibly beyond. So that 29.75 to 31.75 area is going to be important. A failure at that zone now marks a failed breakout attempt from yesterday, and from there we can revisit the previous VPOC at 27 and then the 22 to 24 half zone, which marks yesterday's low, yesterday's IB low as well. And even though responsive buyers can technically still defend that area, at that point the buy side is not going to be in control. So that's something we'll have to gauge in real time and determine whether it's worthwhile. We will probably get some level of response there at 22 to 24 half, but at that point the buyers aren't going to be dominant. So if we're going to get a bigger continuation into 51.53 and 57.5 to 60.5, then ideally you want to see the market holding above the overnight low, and you want to see buyers engaged and active off the 38.75 to 41 area. On the upside, 51 to 53 is a short-term objective, a target in the event of a breakout, and 57.5 to 60.5 can be tagged as well. A higher probability of sellers to be active at the 57.5 to 60.5, and then beyond that, 68.5 to 71 is strong resistance. It marks the recent balance area high, and it's also a range extreme. So we may not even get to 68.5 to 71, given that it's a Friday, we're heading into the weekend. The expectation is for sellers to be active on first test of 57.5 to 60.5. Eventually, we can make it through that, but on first test, we will probably get a response at 57.5 to 60.5, so that could be a intraday short setup. So those are really the main ideas heading into the open. Our short-term bias is going to be bullish above initial support, but we do have to see broad market strength and decent upside momentum in order to get a breakout above 45.5 to 47.5. And that's why on the trader worksheet, our short-term directional bias is still neutral, because we are still trading within a balance area. We are still trading within a range. Yesterday's rejection tells us that the buyers are stepping in, and that's why we are a little bit more bullish as long as we're holding initial support. But we do need to see those signs in real time as well. We do need to see a upward trending advanced decline line, a tick holding above zero, participation from the other markets, and relatively bullish price action in the S&P as well. And that's why short term, that initial support area is going to be key, and then beyond that, 29.75 to 31.75 is quite important for the buyers to maintain. So those are the main thoughts. Let's see if the buy side can maintain the control that we saw from yesterday, and we'll take it from there.